Hello and welcome to Blythe Business News. Today we're joined by Mark Child, Chairman and Chief Executive of Condor Gold. Condor Gold operates a couple of very interesting gold opportunities in Nicaragua. Mark, thank you for joining us. As a start, can you please give us a quick overview of Condor Gold?
Yes, Condor Gold's been operating in Nicaragua for 14 years. In the last 8 years, we've drilled out 60,000 meters, and we developed a very high-grade gold deposit. We've got 2.4 million ounces of gold. That's independently verified by SRK Consulting in Cardiff. Half of that is in the indicated category, the higher category. Half of that's inferred. And of that 2.4 million, half is open pittable, roughly, and half is underground. Within the open pittable part, we have an economic reserve, which we've announced. And then we've taken that's for a single pit, a Landier open pit. And we've taken that through permitting. We've got the permits to construct and operate the mine now. And that was a 2 to 3 year process of actually getting permits. And now we're sort of adding in additional feeder pits that we're permitting it to make it bigger.
And recently you've just announced in the last couple of days that you've got the environmental permit for Mestiza. So tell us, what does that mean about the prospects for Condor then?
Well, it's a significant permit. I mean, firstly, it demonstrates the government's permitting, which, to state the obvious, is really important if you're in the mining business, because there are many countries around the world that are delaying projects. So actually to have a government that's pro-mining, lets you own 100% of the asset, there's no free carried interest, all that's good for the shareholders to be. So we're in the right address, and gold's the third biggest export. We have Landier open pit already permitted, and with the permit for the pit came the permit to construct the processing plant, the tailing storage, the waste, the explosives, the dams, the water and the power, everything that goes with a operating mine. And that was within 500 hectare perimeter. The Mestiza permit, the significance of this, it's double the grade. So we announced 2 years ago that we drilled out a new deposit of about 120,000 ounces of gold at 8 grams, 8.6 grams. Once you do dilution studies, and this gets a little bit technical, but when you blow up rock in a pit, you mix the mineralized ore with some ore that is not mineralized, some waste rock, you get to 5.7 grams. That's a 50% higher head grade. That's the grade of gold that gets delivered to the mill feed, to the processing plant. So the significance of Mestiza is that it takes our permitted ounces to over 1 million ounces of gold, which is fantastic. That's the mineral resource and reserve. And after our technical studies, that ends up at just under 800,000 ounces of mill feed going to the processing plant. So it puts us into another category to say we've hit that headline million ounces open pittable.
And I read somewhere that some of the grades are something like 12.1 grams a ton. I mean, very, very high grade ore.
It's for open pit, it's exceptional. You're correct. The indicated ounces of that are 12 grams, and that's about 40% of the Mestiza deposit, and the rest is, I think, 7 or 8 grams. But we'll have to infill drill, and that will probably give the grade increase, because infill drilling gives you a greater certainty. So we'd expect the grade to actually go up. The significance after our dilution studies is that it means a ton of rock has 5.7 grams in it. That's today's gold price at $1,700 gold. That ton is worth $310 US for a ton, to give you an idea. On our pre-feasibility study, to turn a ton of rock into a bar of gold costs $55. So you can see the margin. The operating costs remain the same pretty much. The mining costs, the processing, the G&A. But when your grade is much, much higher, just the economics are fantastic. So Mestiza will improve the economics. We'll mine it most likely earlier into the mine schedule to give a quicker payback on the plant and equipment. And if you do the maths there, we expect to extract in the announcement we said, about 111,000 ounces of gold. And that'll give us $150 million worth of cash flow just from that deposit, because the grade's so high. It pays for the whole deposit in a way, the whole project, sorry, in terms of putting up the processing plant.
So very high grade, open pitable, which means the capex is not as anywhere near as high as going underground. So very high grade, lowish capex, very low cost producer, lowest quartile cost producer.
Yeah, in our pre-feasibility study, we're the all-in sustaining cash costs, which is the matrix including the sustaining capital for wear and tear and replacement of mining fleets and equipment, is $690 an ounce. Call it $700 an ounce. Well, you can see at $1,700 an ounce, there's $1,000 an ounce free cash flow. So if we produce 100,000 ounces or 120,000 ounces, which we can do with these feeder pits coming in, we believe, yeah, it's gonna throw out $120 million free cash flow.
So you got the permit in the last few days. You must have been putting a lot of work on the ground and with the authorities in Nicaragua. Just give us a quick update of what was going on in the run-up to getting the permit.
Yes, well, a permit has to be planned. Nicaragua has a very robust environmental law, and there are 18 technical studies that have to go into applying for the permit. So the permit application is called an environmental social impact assessment. That's 18 different technical studies, everything from the hydrology to the environment, to the mine waste, to the pit angles, to the mine schedule, explosives. So it's very detailed. Those took 12 months to do. You then submit those to the ministry. The ministry has inspections and signs off on the technical aspects from an environmental social part. And sometimes they say, would you change this? And there's a conversation. And then you have a public hearing. And the villagers then, do you want the mine? Do you want the jobs? And we held those on the 28th of February. We had over 300 villagers and people attending the public consultations, as they call them there. Yeah, and we were granted the permits, which we announced yesterday.
So permitting, big tick in that box. What should our viewers, what should investors be looking at over the next few months as you move this towards production? And what kind of timescales are we looking at?
Well, the next announcement, which I expect in the next couple of weeks, is for a second feeder pit, a high-grade feeder pit. So another 100,000 ounces of gold at just over 4 grams. And saying just over 4 grams, well, it's over $200 a ton rock and $55 to turn into a bar of gold. So again, they're quite shallow, these small pits. They're 100 meters deep. You could mine them out in 18 to 24 months. So it's not, we're looking at taking an open pit down 300 meters or something, and there's no stripping. Importantly, on Soy Mestiza, I should say, we own the land, so we can actually go and mine it straight away, subject to further work. So the next step, I think, we get that permitted. Once we have that permitted, we'll have just over 1.1 million ounces mineral resource reserve permitted for extraction. Our internal studies on that show that could translate into 120,000 ounce production per annum for 7 years from open pit only. In addition, we have underground of 1.2 million ounces. We've done underground studies that we could add easily 50,000 ounces underground. But the capex for underground is quite costly. Additional drilling, development work, ramp work. So the idea would be to do underground out of cash flow later on in production once the mine's built. In terms of the next steps, we're fully engineering everything. We have about 30% of the tailing storage facility engineered. We've completed several of the engineering aspects of the project, from the plant layout to the power, to the mine schedule, to the waste dump schedule, to the accommodation blocks, sewage. So we're working on getting it shovel ready. In terms of the land, we've got the land on Mestiza, which is important. The land on the main area for the plant, we have all the land for the plant. So that's fantastic. We can put the plant up tomorrow. We own all the land where the plant is. We bought 60 hectares within the pit for over $500,000 2 weeks ago. So that's good progress. We have, say, 70% of the land. We have offers out on all the land, but we want to basically this year complete the majority of those engineering studies, have all the land, and do the site preparation. So I'd like to say to you, by the end of the year, we've fenced off all the land and we put a bulldozer on, and we're clearing the site. So investors can see that there's a clear step towards production and cash flow. So those are the main objectives this year: get the additional permits, do the mining studies, get it shovel ready, buy the land, but importantly, we're permitted.
So, exciting times at Condor Gold. That was Mark Child, Chairman and Chief Executive, telling us about his operations in Nicaragua. Condor Gold is listed on the AIM market in London with the ticker CNR. The company currently has a market capitalization of £32 million. So that's a very high grade, very low cost operation in Nicaragua. Thank you for joining Blythe Way and Condor Gold.